Hello, everyone. It's Julissa Cariello. I'm here with at Maestro working on this construction conference, and I'm covering estimating and cost pricing. And one of the things that I'm going to share with you are just a few spreadsheets, which you'll be able to download and have and utilize going forward. But I wanted just basically to share how we do this, right? And to me, sharing with you guys some of the stuff that I wish somebody would have shared with me when I started the company or when I was trying to figure out how to establish an actual process for estimating. And so I'm going to go ahead and start because we have 30 minutes, and feel free to ask questions on the chat. Sam's going to jump in at any time. And so what I'm going to start with first is labor burden. So labor burden is all the costs that are added to every dollar that you pay an employee. You know, we pay taxes. And so you'll see that here, because what we have to do is figure out how to calculate a number that you add, a percentage that you add on top of every labor dollar to be able to cover the cost for this. And so the idea is to be able to identify all your costs up front and then put them in your cost estimate so that you're recovering and covering yourself. So you know you're not going to be surprised in the end that you had to pay taxes, or that you wanted to do benefits and you didn't have the funding for it, or anything like that. So what we do is basically included in here. And so I first start with my direct labor. So these are employees that work directly on the projects. This is not office staff. It's not the receptionist. This is really the people that are going to be building the buildings, right? So I list a project manager. I list his hourly rate, his annual pay. Of course, this is low, but I just want you to get the idea of how we incorporate this. And if you notice here, I list two project managers because the idea is that you list your whole field, not just on that project. You want to incorporate the costs that the company pays for the field workers. So you list them, your labor, your assistant superintendent, a carpenter, a helper. And what I do is I basically let it calculate for the annual pay. And then I start adding all the costs that go into that. So the first one is FICA. This is where we identify the taxes that are paid under each employee. The FUTA taxes. If you notice my rates here, I'm basically sharing the formulas at the top of how it calculates. So it's the first 7,000, it's 0.008. That's how the FUTA tax works. The Texas Workforce Commission tax, that one again is only at 9,000 times the 0.0815, and your rate will be whatever your rate is, right? I'm just giving you an example of how we do it. The general liability, this is per every 1,000. Again, this is your insurance agent will tell you what your rate is. This is just a number that I'm plugging, and it multiplies it times the annual rate divided by 1,000, because that's how that policy works. Your workers' comp, you can get the rate based on your hourly, based on your annual pay to get to that rate as well. And then I'm including, if the company pays for 401k, that's the match that it does. And the cost for the rest of the benefits are the cost that the company pays for, not the total bill that was paid. Because if the employee pays a portion, you don't include that. You only include the portion that the company pays. And so what I'm doing here is basically saying our 401k that we're doing, if I offer health insurance, that's the portion I have to pay. If I'm doing dental insurance, vision, life insurance, accidental life, short-term disability, and then I go into vacation pay. If I give them 14 days, and you can adjust it, do 8 days or whatever you have. If you do sick days, you know, I include that amount too. And all that is calculated based on the annual pay. So it's going to add up the total in here. I also do holiday pay. And then I also do 1 week of bonus, because I like to give bonuses, but you can say I'm going to do 2 weeks, or, you know, you can create the formula anyhow you want. The idea is to just make sure that you're including a percentage. And if you notice, this will add up to a total, and then it gives you a percent down here of the total wages. So it takes it takes the total cost and divided by the total wages and gives you a percentage. And that's how you come up with the field labor burden rate of 39%. And so what this means is that every dollar I pay for labor, I need to add another 39% to cover all these expenses. And then I'm able to go buy it. Now, if you come in and you say, I don't offer health insurance, so that's not a cost for me. Well, your labor burden would be lower, but the idea is for you to offer it, these benefits, so that you can keep employees, so that even if you don't offer it, if you start charging even at a 40% or 39%, you'll start creating some funding so that you're able to afford it going forward, right? Are there any questions on this page?
We had one question from James Lesko. He asked, would you mind sending me that spreadsheet?
Yes, this spreadsheet is going to be able to be downloaded for you guys to use through this WUVA application. Just remember this 39%, because I'm going to bring it back into the bid sheet in a little bit. So I'm going to show you where we grab all these numbers from. The next spreadsheet I'm going to show you is the general and administration of expenses. So the difference between this is that these are the costs that I'm saying, these costs are what it takes to run the company, right? It's not directly tied to a project, but it's overall the cost for the company to exist. It could be rent, it could be advertising, banking charges, the receptionist, if you notice I have payroll costs here. It could be professional fees, accounting, all those things are tied not to a particular project as direct costs, but it is cost that takes to run the company. And so that's what we call general and administration expenses. And so what I'm basically proving here, because my goal is to show you how I come up with this overhead rate. So this G&A rate, which we call overhead, it's the same thing, is 10.7, right? What I'm basically taking is the revenue for the prior year, and then I'm subtracting the direct costs, anything that was directly related to a project, I subtracted here, and then anything left is where I'm adding the cost to run the company. Now, this is where I'm able to say, I want to grow the company, I want to get rent, I want to get a space, I want to hire an accountant person, or I want to be able to pay myself, or whichever it is that you're doing. You're adding money here, but you're able to calculate it and come up with the overhead rate. And so what happens is, what you want to add on every proposal, you want to add this 10% to it. And this is separate from profit. This is not saying this is the amount of profit and then you don't bring anything extra, right? This is saying I'm going to add profit, and I'm also going to add a G&A cost to run the company. So I'm covered on every proposal that's going out. Now, what I'm also doing here is I basically am subtracting from here to get these percentages. And if you notice, they will add up to 100. But what I'm doing is the cost for everything, from utilities to the cell phone to the safety supplies, whatever it is that I buy, I put it on here. Or whatever I think I'm going to spend, I'll put it on here. I'm creating a budget for myself to stay within that range, right? And then I'm also always leaving a percentage here, which I'm leaving 3% for cash to stay in the company. You want to plan that out at the beginning so that you're able to start building your capital, right? That's how you're able to build cash, by watching this number as well. So if you're leaving a percentage, a rule of thumb is 3%. Some will do 6%. It just depends how well you're able to run the company, because these costs are you're going to have to manage, right? And so the question always comes to, where do we charge? Where do I charge myself as the owner? Well, you start charging yourself in here first, but you also can charge yourself on the project as a project manager. So you charge on both buckets, because you want to be able to afford a project manager eventually, so you're able to step away, but you got to charge for it in order for it to show up. I see some questions maybe.
No, they were just asking if they could get a copy of the presentation.
Okay,
Yes,
yes,
and I
that
would
is
just like to add, it will also be recorded, so they can go back and watch this recording as well.
perfect, yes. And I think for 6 months or something, it's available to rewatch.
Yes, correct.
Okay, so I also want you to remember this 10%, because I'm going to show you where we're going to add it to the bid, but this is how we calculate that number. Now, the other thing I like to do is that I like to plan, and I'll bump this number up as the company is growing. I may bump it up 25% so that I can see what the cost would be. And I would bump up my direct cost 25%. And guess what? I'm going to bump up everything down below 25%, allowing me to have a little bit more budget to spend to hire or to get a bigger space as we're expanding, right? But the main thing is tracking what is this number here, the 10%, and what is the percent that you're leaving with the company so that it can start growing and building some cash. Any questions before I go to the next slide?
We don't have any yet.
Okay, good. All right, so now the most important, we're going to the bid sheet, right? This is where I'm not going to tell you how to price your item. What I'm going to basically show you is how to incorporate those percentages in the bid. So here's a sample bid. I'm including a supervisor, I'm including demolition costs, and I'm doing your typical, I'm doing materials, labor, equipment. This is if you rented. The rule of thumb is if you own the equipment, you charge the rental rate so that you can start earning some income on that equipment as well, but don't go above the rental rate, right? The others, again, if you have permits, if you have anything that's specific that doesn't fall under equipment, you can put it there. Subcontractors, I track those separately because your insurance policies will carry those differently. And so this is a simple spreadsheet. It is very much a typical by line item of what you're installing or how your trade works, right? And again, I'm gonna keep it simple, but the reality is what our estimating team uses today are spreadsheets and spreadsheets of takeoffs, and they're multiplying numbers back and forth. But the concept of how we multiply the multiplier numbers is the same. So what this spreadsheet does is provide totals. Again, what this number here for labor, anything that is labor related, it's going to multiply the 39% that we talked about on labor burden. So I'm adding the labor burden based on that labor, 9,500. Then I'm going to add 2% for general liability insurance. The general liability insurance is a percentage based on how much you sub out. And again, this is for you to get that percentage from your insurance agent. This number could be 1%, 1.2% based on your past performance. If you don't know, plug in 2%, so at least you start charging something. And then here I am bringing my G&A expense 10%. Again, this is the one that was down here. That's that 10%. I'm adding that number. And then here I'm adjusting, I'm adding a profit of another 10%. And so again, I am asking to reimburse my proposal will include reimbursement to run the company plus all my direct costs for that project. If there's sales tax, I add 8.25. This particular one, I said no. If there's bond, you add your actual bond fee. Most of the time it's 2%. The larger the bond, it gets lower. If you're doing an SBA bond, it's going to be 3%. So worst case, if you do not know, add 3%. And then when you actually get your numbers and you're getting fine-tuned, you can pick that up. So then all these add up, and now I know my base bid amount is 124,000. Now, one of the things I like to do is, if you notice here, I'm putting in actual numbers on these, and then on G&A, I'm saying adjust to compete. And on profit, I'm saying adjust to compete. Now, the reason I do this is because based on the market of who the bidders are per client, every single one will have a group of vendors that are competing. And after you start tracking the bid tab, which I'm going to show you next how to do, you're going to be able to know I can compete at 12% or I can compete at 15, or I may compete at 6 because it's just a tough, market. Or I may be able to bump this up to 15% and this to 12. You're going to know based on how your bid tab is coming out, right? And I'll show you that next. Are there any questions on this spreadsheet?
Not so far, no.
Okay. So the next thing I'm going to do, so now I know my base bid is 124,000. I treat the alternates whenever there's alternates the exact same way. I'm adding the same percentages across so that we're including costs for every single item. So now I'm going to show you the bid tab, because the most important thing is when you submit a bid is to find out where you landed, right? So this is just a sample. I removed all the names, but basically, there was a general contractor. Now, the reason I say GC is because the goal is for you to become a prime contractor where you're bidding directly with the client. And it could be, I'm working for the city or I'm working for the school district. Now, if you say, well, we only do flooring, you could still bid directly, But if you're a subcontractor, it's really important that you do this because you want to know where you're landing in the market. Now, what I like to think is that if I have a client, let's say I work for a university health system, there's going to be a particular vendors that go after work at university health system, not everybody, right? And so what I try to learn is where did my company land based on that group of folks? And so what I'm doing here is basically doing a quick analysis. How much higher was it? How much lower? What percent above the bid? This tells me the percentage I need to adjust my bid to get lower. If I want to get the job, I need to be 3% lower or 10% or whatever it is. But this helps you go back to your bid sheet and say, well, if I adjusted this number here or my profit down to whatever, I would have gotten low. One of the things you also want to look at is when you see your number and you're at 13% high, go back to your bid tab and say, okay, if I was to go in here and remove my profit completely and remove my G&A and I still couldn't get the job, then your error was up here in your cost pricing, not in your markups. There's an error. There's an error that we say this is based on I charge too much of my profit to compete, but then there's the error that if you're way off, then your error is either your material pricing takeoff or the quantities and labor that you're charging, right? You got to go back and adjust because you want to stay within the market. Now, one thing for this that we look at is like, I don't want to be the cheapest in town. That's not what I want to be known for, right? So my goal is not always to be first. My goal is to pick projects that are going to hire based on the quality of work that you do and pricing. So it's a best value approach. And so the more you're able to get into that arena, the better the chances you're going to get, and you don't have to be the cheapest. And the better the chances are that you're able to increase these percentages a little bit higher because you're going to be based on best value, right? So if you see like you're competing against another general contractor or another vendor, and they're always a little bit higher than you and they get hired, their numbers are going up higher because they're basically selling on the fact that they're going to do good work. But then again, there's also those clients that look at nothing but the costs, right? And then you got to get to be low. But when you do that, you want to look at who's competing against you. Are they at the same level that you are so that you can adjust your percentages to win, right? Are there any questions on this spreadsheet?
Yes, we do have one from Timothy Barella.
Okay.
Can those percentages work for everyone's bids? Is that a good template for me to work my bids off of now?
Yes, you could use, as you enter the actual bid numbers of when they have the bid tab, they're going to read everybody's name and everybody's number. Come in and plug it in, and these numbers are going to adjust with percentages. That allows you to go back and just evaluate what could I have changed to get there and who's my competition, or you could decide I don't need to be bidding in this arena because they're just cheap about everything and I can't do it, right? But it just gives you the evaluation purpose.
We have another question from Julie Hartman. Can you elaborate a little more regarding best value? What specifically should we focus on?
Okay, so best value is going to be where you're going to have to get really good at your proposal writer. You got to have somebody who could tell the story and market the business and able to show how the experience the company has, right? So you're able to talk about the projects you've done. You have letters of recommendations, anything that shows you're an A+ contractor. That's your goal. And so if you can show that, and you can also get your pricing, you don't have to be the cheapest, you just have to be good. Any other questions?
I think that's all we had for now.
Okay, I'm going to jump to the next slide. So one of the most important things is the bid tab, right? Where are you landing? You got to do this evaluation. The next important thing is to actually do a job cost analysis. So basically, it's taking your bid sheet, which is this here, and all your direct costs that's in here, you're putting it on a spreadsheet and you're able to compare. Again, my demolition was $7,500 for labor. When I go to my cost analysis, again, I picked up the same revenue. Now I have every line item broken out that's in my bid sheet. Labor, equipment, materials. If you notice, I have it here. And what you're saying is, this is what I bid, and you're comparing it to your actual cost. And you're able to look at the variances. And the reason you want to do this is because you want to know, are you charging enough or are you charging too much? And if, again, you want to get really close to your cost, and you also want to use this to manage the project. So when you get a project manager who's running the job, you say your budget is only, this number, and you're going to basically say, my budget is 103,000 for cost. You can't go above that. You got to beat it. And then as you're tracking stuff, as your cost is actually coming in your accounting system, you're coding it to these items so that it goes directly to that project under these items, and you can track and have a variance at the end of the project. And if you notice here, this particular project, I'm looking at my totals, I was expected to make a 20% profit and overhead rate of 20,000. I came in at 6% higher because I had a savings. And now I'm at 26%. So this is a really good job, right? We're saying, okay, I actually improved my margins. Now, tracking the 20% versus 26% is a huge deal, because you want to know, is there a trend? Can my guys perform better than I can bid? And the answer should always be yes. If it's not, well, you got to figure out, did I bid enough? Or do I have a team that's doing bad work that's having to redo work every time? Do we have any questions on this section?
We do. One moment. What is the alt column? Someone is asking.
The alt. Where's the alt column? Is that the actual? Alt. I'm sorry, I don't see an alt. Oh, I'm sorry. Is that on the bid tab? Alt here?
Yes, possibly.
Oh, okay. This is when you have a bid that the client gives alternates that says, price this, but price this as an alternate just in case I want to add the extra flooring, or I want to paint a different color, or something like that. These are just alternates. The clients come in and saying, also price a canopy for me. I don't want it in the bid, but I want it extra so I can decide if I want it or not. Okay, any questions on this page before I go to the next one?
I think that was the only one.
Okay, so again, it's keeping track and measuring, right? How am I doing to make sure that I'm covering all my costs? Now I'm going to do the same for the G&A. So remember, here's where I created the budget to run the company. These numbers here have to be put in with actuals as you're spending them. So I'm going to do a G&A analysis just the same. So again, I'm starting with what I projected, and then I'm doing actual cost. What is coming in? I had 109. What is my variance? At this particular one, we spent every single dollar, but I did not go over. I stayed within my range. So your goal is to create that variance so you're able to say, am I higher or lower in any percentage? Again, it's just keeping track and you're able to budget that you're spending no more than what you budgeted. Any questions on this page?
Not right now.
Okay. So budgets are important, not just for direct costs, but also for your overhead that you're tracking that. Okay, so the other thing I'm going to show you is a scorecard. This is where I'm actually budgeting and putting together a plan for estimating because I want to grow the company. So for instance, if I want my company to grow to 5 million a year, I have to actually bid a number of projects to get me there, right? And I have to track that I'm doing that. And so what I'm doing here is creating a goal for that. Now, the rule of thumb for this is that you budget for what you want your goal to be, but you also have to say, okay, I'm going to bid projects and the backlog. This is where you're saying, I'm going to create backlog for next year. So after the rule is from January to June, you're bidding jobs for the current year. From June to December, you are bidding jobs for next year. So that you're able to have 50% of next year's workload already bought out, ready to go. So that you're not saying, I got to get a job and then go work. You're getting ahead 6 months. That is very typical for this industry. And so the sooner you learn this, the sooner you're going to be able to manage that. So what I'm doing here is basically saying 5 million is what I want to complete in work for this year, but I need to also get 3 million for next year. And then I'm going to deduct the amount that I brought from last year. So the 3 million that before, but last year my backlog was only 2 million. So I have to win 6 million this year in order to hit my 5 million for the year. Does that make sense to you guys? Or do you have any questions on that portion?
No questions yet, but we do have about 3 minutes left. So if anyone has any questions, please drop them in the chat.
Okay, so what I'm basically doing is letting the formulas calculate. In order for me to go after 6 million to win, I have to bid 1.2 million per month. And what I'm doing is tracking every month how much I actually bid. And these are opportunities that I was able to submit on. Now, the other thing is I have to be awarded at least 500,000 a month. And so then I'm tracking how much I actually got awarded. Now, if I have a 0 month, then the next month's got to double up, right? The goal is to have at least something you're shooting for. If you go above it, then you're way above that range. Now, the other thing I'm showing is the hit rate. That is at less than, you want to be greater than 40%. That means the number of bids you bid, you're actually doing that. So if you notice, I'm going to show you that. But I'm going to skip to the bid calendar. So the bid calendar basically shows you the tracking of all the bids you submitted every month. And I'm just tracking them here. And I know we don't have that much time, but what I'm showing is the budget for the client, what we did and what was awarded. And so what was submitted versus what was awarded, that's what gives you your win-loss rate at the bottom. And you got to put it in every month so you're able to keep track of how you're doing. And then you're able to say my hit rate is 29% or my hit rate is 50%, however you get to it, right? The next thing the last one is the client list. You need to make sure you have a list of clients and the point of contacts and you're tracking what type of clients they are. What you want to do is have a diversified pool of clients. You know, some are private, some are in public agencies, some are schools, some are federal. The reason you want to do this is because you want a different pool. They all have different cycles for funding. And so they won't have projects all year long. They'll only have them a certain time of the year. And so, but if you have a mixture, you're able to keep your bid log, your bid calendar busy, right? Any questions?
I don't believe we have any right now.
Okay.
Yes.
This is pretty much the spreadsheets that we use for estimating. Again, take them, use them tweak them, make them your own, and use them to plan and start tracking how you're doing. Keep score, right? I thank you so much for your time, and feel free to reach out to Maestro if you guys need any assistance on anything.
Yes, of course. Thank you, Julissa, for your excellent presentation. Actually, we do have one question if you have some time.
Sure.
What size estimating team do you have?
Right now, I have 3 estimators. But when I started the company, I had 3 employees. I had one estimator who did operations and estimating, and I had myself, and then I had a proposal writer who did marketing and packages and stuff for me. So you can do it with one, you can do it with half a person. You just have to be able to be focused on what you're going to do and watch your win rate, right? You don't want to have a really low rate where you're bidding and not winning because you're not analyzing your cost.
Awesome. Okay. If there are no more questions, thank you so much, Julissa, again. Like we mentioned, all of these materials and the recording of this presentation will be available for all of our attendees. And our next session will begin at 10:30. So thank you again.
Thank you.